What's going on, guys? This is going to be the top 5 stocks to watch for next week. So we got some pretty cool stuff coming up, and we have to keep in mind that even though the market's very uncertain, inflation's at pretty much all-time highs. Now is still a good time to buy stocks if you do have cash, extra cash laying around. So those fortunate enough to continue investing, now is more important than ever to throw your money into the stock market. So we're going to be going over the top 5 stocks to watch for earnings. These stocks, of course, are going to have higher implied volatility. So that's why we trade options during this earnings season for these stocks, just because as we're pretty much selling options, and as option sellers, we're going to be making more money on premium just because of that higher implied volatility. On this list, first up, we're going to be getting into it. Crowdstrike reporting earnings Thursday after the market closes. And CrowdStrike is one of those companies that is going to help provide cybersecurity with everyone moving to remote. Now is more important than ever for cybersecurity, and CrowdStrike definitely fills that void. We just have to keep in mind that a lot of stocks are down from their highs, so CrowdStrike is no exception, going from price point of almost 300 per share to now roughly 160, $170 per share. And if we go over to the CrowdStrike options, if you want, there's 2 strategies that we can use. The first one being, of course, selling a cash secured put, and we're going to be collecting a lot of premium, as we can see here, because this is going to be a volatile week. And as we can see, we can go down pretty far down the strikes. And selling cash secured puts, we really want to aim for around a 1% return on our money per week. So we're really looking for something probably closer to this 135 or 136 strike. So what this is saying, if we sell a put here, is as long as CrowdStrike stays above $136 per share by expiration, which is going to be a weekly option, June 3rd, and we're basically winning on this trade. It's an easy 1% return. Now, we do have an 88% chance of profit. It's a very high chance of profit. The stock basically has to drop over $30 per share this week. And if it does, if it goes below our strike price at expiration June 3rd, we're obligated to buy 100 shares of CrowdStrike at our strike price, which is going to be $136 per share, which is a pretty significant decrease in stock price. So if you were to buy 100 shares right now, it would cost us $167 per share. But we're saying we're fine buying 100 shares at $136 per share. So it's a very nice win-win situation. Either you win on the premium, collect a 1% return per week, or you win on the shares and you buy stock at a cheaper price. So very nice strategy there. For those with smaller accounts, what you can do is a credit spread. So we're going to be doing something like, for example, selling the 136, and then we're going to be buying the one under it. And as you can see on the right side of our screen, it's going to be a put credit spread. So similar strategy, as long as the stock stays above 136, we win on our trade. But if it doesn't, then you just lose your collateral. So that's the downside of a put credit spread. You don't collect shares if you lose on the trade. So, but the good thing is about a put credit spread, and people with bigger accounts can utilize this strategy as well. You're collecting more premium because, as you can see, it's going to be a 10% return compared to a 1% return, for taking a little bit more risk because you're not getting shares if you lose on the trade. It's just one and done. So it's going to be a 10% return because we're putting up $100 of collateral, and I'm collecting in return $10 of credit per contract that we sell. So it is significantly less collateral that we're putting up, and it is significantly more premium that we're collecting. So it's going to be a higher return. So you could use either strategy, put credit spread, or a cash secured put. So that's how those two work, and we're going to be utilizing those strategies on these other 4 stocks. So next up is going to be Lululemon, which actually reports earnings the same day, Thursday after the market closes. Lululemon, you're probably going to want to sell a put credit spread just because of how high the stock price is. So very similar strategy. Go to the options chain, sell, put. We could do like a June 3rd expiration. That's fine by me. And let's head for something pretty closer. 250 strike is going to be pretty appetizing to me. 87% chance of profit. So we're going to be selling the two. This is just an example. You could always choose and adjust your strike prices to your liking. We're just giving you examples of what you can do during the market hours. So we're going to be selling the 250 and then buying the one below it just as before. We're collecting a credit of $22, collateral of 250. So it is roughly around just slightly under 10% return. But that is going to be a pretty solid trade in my opinion. And if you do have a large count, you could sell a 250 strike expiration cash secured put, but that's going to require $25,000 of collateral, and most people just simply do not have that much capital to throw into a single options trade. Next up on our list is going to be GameStop reporting earnings Wednesday after the market closes. GameStop is another high price stock, um, and it is down quite a bit. As you can see, it was around $300 per share. Now it's sitting around half that. So let's head over to the options chain and see what we can do. I'm anticipating that this stock is going to have, high premiums. So lots of money to be made here. We can go down far the strikes in order to be pretty safe. Yeah, we can look how far down strikes we can go. We could do something like a 88 cash cure put is going to give us a 1% return if we just simply sell this, and it's going to require $8,000, almost $9,000 collateral. So if you want, you can do similar strategy, selling a cash cure put or selling a put credit spread, even though the premium is not going to be that much. Yeah, that would be a 3% return. So if you do have the money, if you do have like $10,000, you can just sell a $88 strike. That would be pretty good there. And then we also have Chewy, which reports earnings Wednesday after the market closes. And Chewy is a cheaper price stock, so we can simply sell a cash cure put. And of course, Chewy is it's not the granola bars. It's actually a pet retail store. So they sell a lot of pet supplies, which is pretty good since a lot of people during the pandemic they ended up acquiring a lot of pets. And Chewy definitely is a solid company. Even though stock is down 63% the past year, that's only because we're just in a bear market. A lot of people are selling, they're moving to cash. They have bills to pay, which is pretty reasonable. So let's head over to the options chain. And Chewy is a high volatility stock as well. So we can go pretty far down the strikes and collect some really nice premium. Now these are just suggestions. If you have a high risk tolerance, like 2%, you want to make 2% per week, you can sell a $19 cash cube put right here, collect easy 2% return. But for me, I like between 1%, 1.5%, just to be a little bit safer. Markets are pretty shaky. So I would do the $16 cash cube put and collecting a 1% return on this trade for the week. And that's a pretty significant drop. The stock has to drop $11 in order for you to start losing money. High chance of profit, 93%. I really like this trade, and we'll probably be opening it up on Tuesday just because the market's not open on Monday due to the holidays. So last stock on our list is the fifth one, and that is going to be ChargePoint. Where is ChargePoint on here? Actually, Tuesday after the market closes on ChargePoint. Actually had a really good day last Friday, but it is still down quite a bit from its all-time highs, which was around $46 per share. And ChargePoint is definitely going to be a very good company for the future for long run. So you can just simply honestly buy and hold shares. It's at a relatively cheap price, pretty much where it IPO'd at. But especially with all these manufacturers moving to electric vehicles, ChargePoint will be able to help power those electric vehicles through electric vehicle charging system infrastructure, which is going to be very key to the success of EVs. So we're going to be selling some cash geared puts here. And what we can do is a $10 cash geared put, and that's going to give us around a 1.6% return on our money for this week. And honestly, I like this strike the most. Just because it really hasn't been below this $10 price point. So that's it for this video. We have 5 stocks on our list for earnings. Market is closed Monday. Nothing really is going to report on Friday. Yeah, it's going to be a volatile week. If you have the cash, you can simply sell some cash gear puts, But if you have a smaller account, put credit spreads are the way to go. Thanks for watching.